Hello, my name is Gregory Schieffer, and I will be presenting a project on cryptocurrency and its effect on the world. Since 2009, cryptocurrency has had a big impact on the economy and society, but few people understand exactly what it is. Born in 2009 with Bitcoin, the world's first crypto, it's been an exciting and volatile market for investors. In 2008, an anonymous person writing under the pseudonym Satoshi Nakamoto released the Bitcoin White Paper, which introduced the revolutionary concept of cryptocurrency to the world for the very first time. It was called Bitcoin, a peer-to-peer electronic cash system, and it detailed the concepts behind a new form of digital currency that was not reliant on central authority or financial institution to back transactions. Shortly after, in 2009, Nakamoto released the actual software, but Bitcoins weren't traded as currency until 2010, when somebody ended up using 10,000 Bitcoins to buy 2 pizzas. For reference, 10,000 Bitcoins in today's prices is worth over $400 million. I wonder if he ever thinks about those pizzas. Bitcoin continued to increase in popularity throughout 2011, and rival cryptocurrencies began to emerge, like Namecoin and Litecoin. And then in 2016, Ethereum came out, which was using a cryptocurrency called Ether to facilitate smart contracts and apps. Ethereum was the very first of the initial coin offerings, which fundraise platforms and businesses and entrepreneurs. They're essentially stocks in the tech Bitcoin digital world. So one of the most misunderstood aspects of cryptocurrency is how it actually works. I admit I didn't understand how it worked at all myself until I started this project. But without a physical token or central authority to govern and validate transactions, cryptocurrency uses what's called a blockchain, which is a record of transactions that's updated and held by currency holders. So the blockchain takes a record of all of the transactions and it makes a ledger in chronological order that is verified by peer-to-peer networks that use personal computers. These personal computers are called nodes to do calculations and confirm the transaction. This is called mining and is typically rewarded with crypto units, which is why people do it. With every time there's a new transaction, new blocks are added to the chain on each coin, which is then broadcasted to the nodes, and the nodes will record and validate the transfer of ownership. This is how the cryptocurrencies prevent the currency from being used in duplicate, like counterfeited and spent more than, like if you have one crypto coin, this is how they keep you from spending that one coin more than one time. So when you spend it, it's gone because the blockchain recorded the transaction. Okay, so world impact. Cryptocurrency is one of the fastest growing financial and technology markets in the world. And so it has obviously had significant impacts on the economy and technology spheres. In fact, as of February, according to Statista, there were over 10,000, actually 10,397 cryptocurrencies as of February of this year, which is more than double what it was the previous year at 4,501 in 2021. So there are several benefits that make these cryptocurrencies attractive to investors and entrepreneurs, such as the low transaction fees and faster processing. And the decentralized nature of cryptocurrency makes it easier for entrepreneurs to reach international markets and allow access to markets that were previously unavailable to them. Many nations actually push back against cryptocurrencies and make them even illegal, but some, such as the United States, Canada, and the UK, are beginning to accept cryptocurrency as a legitimate form of currency. In fact, the US Department of Treasury has defined Bitcoin as a convertible currency, and the US IRS categorizes Bitcoin as a property for taxation purposes. So how's that for decentralized? The Bank of America even went on one record to say that it predicts that a U.S. government digital coin is inevitable. So as cryptocurrency becomes more accessible and understood, it's being used much more rapidly. In March of 2022, we saw an average of about 250,000 Bitcoin transactions per day worldwide, as you can see on this graph. So, a different kind of cryptocurrency came out in 2016, which was called the initial coin offering, which started with Ethereum and Ether. So the initial coin offering opened avenues for entrepreneurs for raising funds to create new apps or services or coins. Ethereum, Decentraland, etc. Are basically the equivalent to an initial public offering or stocks, and function as a digital version of these stocks that are issued by a publicly traded company. Investors can buy into an initial coin offering in order to get a cryptocurrency token that's issued by the company. The token might have some utility, or it just represents a stake in the company or project. Let's see, the low cost and ease of distribution associated with these initial coin offerings created many new opportunities for small businesses and entrepreneurs, and they stimulated innovation and growth in local and global economies. So obviously there are a lot of great things about cryptocurrency, but like anything else, it is not without its criticisms. So even though they may have enormous potential for stimulating and strengthening economies, many people and critics have complained about its volatility and the potential for illegal activity. So crypto, obviously, as we discussed, has no central regulating authority, and so is often subject to extreme and sudden changes in market value. In fact, in 2013, Bitcoin investors suffered gigantic losses when the price plummeted from $1,000 per coin to around $300, less than a third what its original price was. And it wasn't going to get back up to 1,000 again for over 2 years. Today, it's volatile as well. As you can see on this graph, the value ranged from $30,000 to $67,000 between April of 2021 and April of 2022. So because of this volatility, there's a constant and significant risk of market collapse, and there's no form of protection or insurance on your investments. And in addition to that, because it's an entirely digital asset with no tangible counterpart, it's possible to lose an entire virtual wallet or accidentally delete your currency. Or cyber attacks could delete your currency, and there's nothing you can do about it because it was digital and now it doesn't exist. Also, according to that, you have to rely on, or in addition to that, you have to rely on servers that are holding these digital coins, and if they ever got damaged or destroyed or just turned off, all of these digital assets would disappear. The lack of regulation on cryptocurrency also creates opportunities for crimes such as fraud, theft, and other criminal activity. Because it's an entirely digital asset, assets are open to cyber attacks that are intent on destroying or stealing the digital currency, such as in 2014, Mt. Gox, the world's largest Bitcoin exchange at that time, went offline and just took 850,000 Bitcoins with it, valued at around $450 million at the time. The Bitcoins today that were taken are worth $34 billion. So in January, Reuters actually released an article discussing the crime rates of cryptocurrency, which says that in last year there was record highs in terms of value, with legal addresses receiving $14 billion in digital currencies, which is up 79% from 2020. The article did, however, say that illicit activities share total crypto transaction volume. Illicit activities share the amount of crypto transactions that were illicit activities was pretty low at just 0.15% in 2021, which is a lot lower than the 2 to 5% of global GDP that the UN estimates is connected to money laundering and illicit activity with conventional money. So, in conclusion, obviously cryptocurrency is not a perfect system. Its decentralized and unregulated structure presents unique benefits as well as inherent dangers. There's a lot of debate about whether cryptocurrency is good for the economy or good for the world, but this digital asset is becoming larger and more influential every year. Since 2009, cryptocurrency has evolved from an obscure niche idea in the programming and tech spheres to a multi-billion-dollar industry and driving force for entrepreneurs and technology companies. For better or worse, cryptocurrency has become a major part of international and global economies, and will become a more central element in people's lives as its adoption and understanding continues to spread. So people are going to have to learn about it if they're going to want to function in the society and economy of the future. And with that, that concludes my presentation. Again, my name is Gregory Schieffer, and I hope you enjoyed it, and I hope you learned something. I sure did. Thank you.